The market is going to go up, liquidity will find a way to enter the market. Even if the marginal liquidity is affected by some parts of the SEBI regulation, so be it. I think the markets are driven intrinsically by what is happening within the country and what's happening across the world in terms of fundamentals, and not what's happening on the short-term technicals of this kind that we witnessed just now, which is a P-note scare, and something else will happen 3 months down the road. But unless something gets seriously dented in the underlying fundamentals globally or within India, this bull market is not going to stop.
Look for a few businesses, outstanding ones, buy them at a good margin of safety, and watch them, but sit on them and don't try to do anything with them at every twist and turn. And that would be good enough to ensure that there is a very smart and solid long-term compounding. And that's the opportunity Indian economy is providing, and in turn its markets.
We continue to be fully invested because from a bottom-up perspective, this market looks extremely undervalued. When I say market, I'm not talking about the Sensex. I'm not talking about 30 stocks. I'm saying the opportunities in this market, both in the listed and in the unlisted space, particularly in the mid-caps sector, are staggering.
The reality is that I think we will have situations in the Indian equity markets where there's so much liquidity chasing that you're bound to see phases of euphoria which will make the markets overstretched. At the same time, you're going to see phases of disappointments where liquidity will want to get out, and at that point of time we'll probably get significantly undervalued. So my sense is, yes, investors need to really kind of keep an eye on the markets and watch out for those particular days where the markets are off 500,000 points, 1,500 points, and use those price points to again increase exposures.
The promise for the next 10, 20, and 50 years is very, very large, and I think it's very early, and we're pleased to be here.
I would say is that the biggest thing that's going on today is what's happening in all of the emerging markets, particularly places like India and China, which is we've created wealth for a lot of people.
There you are. Sensex is already above that level. It has touched a day's high of 20,024 at 12 past 3. That's going to go down in the history books as a big day where the markets finally reached the milestone of 20,000. Right now, coming down a bit, 19,991. That's where the Sensex sits. But overall, 20,000 breached. Joining me now is Anindya Abhik as well as Namrata as well as Nikunj, who's waiting patiently in Mumbai. We will, of course, take you to Mumbai as well to bring you some of those live pictures of what's really happening at Dalal Street, where our screen is being watched by millions of viewers on Dalal Street. Nikunj, Dalmia, a big historic day. But Anindya, clearly this is a moment we've been waiting for, and it's right here. And the markets don't seem to be reacting very sharply. It's not that it's touched 20,000 and falling very, very sharply from there.
No, you won't have that. I guess 20,000 a day before the credit policy, that's an achievement. One has to say that. I've just got on my screen out here from 10,000 to 20,000. What has the journey been like? And Reliance Industries has provided 2380 points out of that. So 24% of that journey is Reliance Industries. 12% is L&T, ICICI Bank 10% exactly, Bharti 6.5%, Arcom 6.4%. And if you remember, Arcom is a new category altogether. And if I compare it to their weight in the index, Shivnath, Reliance Industries, as everyone knows, will be about 13.5%. It's given 23.8%, much more than what its weight is. L&T in the index is about 6.5%. It is given 12.5%. Almost double the return. ICICI Bank 9%, given 10%, more or less there. Arcom, that has just about 3.5%, and its return is 6.5% of the total 10,000 return. From 10,000, we hit 10,000 Abhik on 20th of February 2006. We hit 10,000. From then, it's been a tenth, it's doubled, and this is what the returns look like.